Hi there, I'm Randall from Tax Samaritan. If you're watching this, you might have just received that dreaded letter from the IRS. Or maybe you're lying awake at night wondering, what happens if I get audited and I can't find my receipts? As an expat, life is complicated. You move countries, digital files get lost, and sometimes paper receipts just disappear. I want to clear something up right now. Missing receipts do not automatically mean you're going to lose your deductions or face massive penalties. In the next 3 minutes, I'm going to show you how the IRS actually looks at your documentation and what your options are if your paper trail has gone cold. Now, the IRS doesn't necessarily think you're committing fraud. Most audits are just to confirm that what you reported matches your records. As an expat, your return might have been flagged simply because of high deductions relative to income, or maybe a mismatch in 1099s. If you don't have that shoebox of receipts, the IRS isn't going to shut the door on you immediately. They actually give you a chance to present alternative documentation. The key word they are looking for: consistency. So what can you use instead of receipts? Think about bank statements, canceled checks, or even calendar entries and emails. If you're a business owner and you lost a meal receipt, but you have an email confirming that lunch meeting, that's evidence that could help you. There's actually something called the Cohan Rule. It's a legal precedent that allows the IRS to accept estimates for certain expenses if you can prove the expense was real and business related. But there's a catch. The IRS is very strict on travel, meals, and entertainment. For those, they almost always want the actual receipt. And for my property owners out there, if you've done major capital improvements like a new roof, you'll need more than just a guess. Try reaching out to your old contractors for invoices or check local permit records. These steps can save your tax basis and prevent a huge tax bill when you eventually sell. What's the biggest risk of an audit without receipts? Well, the IRS could deny the deduction, which increases your tax bill and adds interest. But here's the most important piece of advice I can give you today. Never, ever try to create a false receipt. A routine audit with missing records is a civil matter. Creating fake documents make it a fraud investigation. It's always better to be honest about what's missing and work to reconstruct the proof rather than trying to make something up. Going through an audit, especially when you're living outside the US, is stressful, but you don't have to handle it alone. At Tax Samaritan, we specialize in helping expats defend their deductions and find tax resolution options that work. We can help you reconstruct your records and represent you before the IRS so you don't have to deal with them directly. If you're worried about an audit or just want to make sure your records are bulletproof for the future, let's talk. You can call us at 775-305-1040 or click the link below to request a free 30-minute consultation. I'm Randall, and let's get you that peace of mind you deserve. Thanks for watching.